Okay, so over the past 5 years, that is how much my stock portfolio has amassed to. So here is the slider. I'll go ahead and click on 3 months. Scroll down. As you can see, this is my real Robinhood portfolio. Feel free to check out videos on my channel if you need any more proof. But that is ultimately what I have amassed in my stock portfolio over the past 5 years. And in today's video, I am going to be ranking the worst mistakes I have ever made with that same portfolio, because believe me, there are a lot. And I'm making this video so that you guys know exactly what to avoid in your investment portfolio. This video I have compiled what I believe to be my 21 worst investing mistakes, and I'm going to be ranking them so you guys know exactly what not to do. Hi, my name is Josh, and let's get into it. Okay, so I'm going to try and use as easy terminology as possible for the entirety of this video, but as you guys can see, here is our tier list. So like I said, I've done a lot of really stupid things with my stock portfolio, and as you can see, we have a lot of different things down here that we are going to have to be ranking today. But I'm going to try and also go in chronological of the mistakes that I made first when I started my portfolio and how I've actually gone through them and what I've learned. So we're going to start with SPACs, or special purpose acquisition companies. So SPACs, for anyone who doesn't know, essentially are shell companies that a company will join an exchange through them. And about 4 or 5 years ago, when I first started investing, when I was just about 15 years old, these were a massive thing. I mean, a huge deal. They were all the talk. A ton of electric vehicle companies joined the stock exchange through special purpose acquisition companies, and there was a lot of hype behind them. And so I fell into that hype specifically. I remember being 15 years old, and I invested in a burger chain called BurgerFi, if anyone knows that. And I mean, I thought it was the answer when it just totally was not. So luckily, I didn't have a ton of money when I was investing during this time. I think my portfolio maybe had $500 in it. So I only had about $100, maybe $200 in these companies. Made some returns, and net negative for sure on those. Definitely seemed a little schemy. And so our grading chart for today, as you can see, so the worst is up here at never do this. These are the absolute worst mistakes you guys can make. The stuff that I have done, lost money, just absolutely terrible advice that you never want to do, in my experience, of course, because none of this is actually investing advice. This is just my personal opinion on a lot of different investing things that I have personally done. Obviously, do your own stuff. And then down at the bottom here, we have barely a mistake, and everything in between just kind of scales up. So I'm going to go ahead and put our first one, special purpose acquisition companies, at could have been worse. And I think because I actually did make some money on a couple SPACs and then lost on others, but ultimately it wasn't insanely risky. I still was looking at the companies and doing research and things like that. So it could have definitely been worse, but still not the best. Then we're gonna go into panic selling. This was a rough adjustment for me. It took me a long time to figure out how to avoid panic selling. It would be one bad day in the market and I'll be like, it's over. It's completely over. But that's a tough thing to learn for a lot of investors. I'm sure many of you guys would agree that panic selling and taking the emotions out of the stock market is really difficult. Panic selling is something that's really difficult to get over, but taking the emotions out of investing is a very important part of being in the market, right? Like, this is money that could make a lot of money, could invest, could be your future. And so obviously emotions are going to be a part of it, but taking those out is really difficult. But panic selling can lead to some very bad events, and you end up being a little too speculative, a little too much. So I'm going to put it in the never do this category. Our first never do this. You absolutely do not want to panic sell ever. And then next up, we have social media platforms for investing. So I'm going to start with Reddit. You guys, I'm sure, are familiar with Wall Street Bets or investing subreddits, things like that. These places are bad, straight up. It took me a long time to realize that everyone is it's the blind leading the blind over there. And while it can be fun and you can find maybe you can find a diamond in the rough there, I personally think that they are a bad place to be, and you're going to end up losing money because they very rarely focus on long-term investing. They more focus on trading and things like that. But again, I'm trying to encompass everything I've done in my portfolio, any mistakes I've made, and personally I think Reddit and any investing forum is what I'm lumping these into. It could have been worse, but I'm gonna put it in not too bad, because there are a couple subreddits on there, the standard ones, where if you are a complete beginner, maybe it's good to have a look around, but I would not put any credence into what anyone says on there because it's just random people online. No one's certified to give investing advice. I'm not certified to give investing advice, obviously. But Reddit's gonna go ahead and go in the not too bad category. And then we're actually going to look at investing discords. So investing discords, I have a slightly different look on it than subreddits, because investing discords tend to be a little more personal. It's almost as if you and some acquaintances were all on the same page, kind of looking at stocks. I tend to think they're a little bit better, but again, it's anytime you're getting advice from people that aren't certified to give financial advice, it does get a little risky, right? I'm going to put Discord in the barely a mistake category because in my experience, I've only ever joined one or two, and they were very small with people I knew in real life. They were fine because it just operated as a means to communicate like, hey, this is what I'm doing. What do you think? A lot of good discourse on there, and so I'm putting it in barely a mistake, arguably maybe not even a mistake at all. And then next up, I'm sure many of you guys recognize this. This is Grant Cardone. And while it's not specifically Grant Cardone we're looking at, it is all financial gurus online. This was a big deal. I think more so nowadays, the gurus have kind of subsided. I think everyone's kind of wised up on, you can't just take financial advice from anybody, specifically guys who act like they know everything about the stock market. And I really do not like financial gurus. I think they're some of the worst people online. I mean, they essentially make money by telling other people how to make money, and that's a huge like subculture of stuff, and I really don't like that. And also keep in mind, none of these people actually have any licenses. They don't have a Series 7, they don't have a 65, they're not CFAs, they're not anything. They're not CFPs. Like, they have no credentials to be giving the advice they give, and I don't know how it doesn't put them in legal trouble. But I'm going to put financial gurus in the absolutely never do this. Never listen to a financial guru about your portfolio. You always have to do your own research. I preach that in every video. Not a fan of financial gurus in any shape or form. And then moving right into penny stocks, investing in penny stocks. So this is something that when my portfolio was first gaining a couple $1,000s, I wanted to mess around with penny stocks a lot because, I learned it from, discords and mainly subreddits, like the penny stocks subreddit. Been on there a couple times. I was still pretty young, didn't know what I was doing. I thought penny stocks could be a great way to return craziness on there. And ultimately, what I feel like a lot of penny stocks end up doing is they end up being pump and dumps, which are completely illegal, but that doesn't mean they don't happen at all, right? And so I really do not believe that investing in penny stocks, at least largely, I would say investing in penny stocks is not really an investment. It's a lot of speculation, and I'm sure there are people out there who have made great returns, but I personally am not buying it. I haven't ever had any good luck on penny stocks. I just don't like them. I just don't like them at all. I think investing in penny stocks, pretty bad for my personal strategy. I'm putting penny stocks in the bad category of my investing mistakes because I have only ever lost money, and I swear I've probably been a victim to a couple pump and dump schemes, to be totally candid. But that was a while ago. I haven't invested in those in a long time. Maybe I'll make a video like trying to day trade penny stocks or something like that in the future, but ultimately that's speculation. I don't think that's investing, which is why I put it in the bad investing mistakes category for my personal portfolio. And then we have the meme coins. So meme coins like Dogecoin, Shiba Inu coin, all of those. You guys remember them from a couple years back. If you were at all in the investment world, people thought that it was a crazy big thing. Same with like NFTs and all of that, but I never really thought they were going to be anything crazy, but I did put a couple $100s into them just for fun. And obviously nothing ever came into fruition with them, but again, they're based on almost nothing in my experience. I don't see the value proposition for a meme coin like that. It's different if you're talking about something like Bitcoin or Ethereum, maybe, depending on who you ask. But I think overall, these meme coins have very little place in any investment portfolio. Now, if you're trying to trade or do something, maybe, I don't know. I can't make that decision for you, but I'm going to put it in could have been worse because I think most people realize that these coins, they're not, I don't think they're actually expecting massive returns. I think most people kind of do it as a joke. I think for one way or another, I think it could have been a lot worse, but maybe this is controversial. I'm putting the meme coins in could have been worse category right there with, okay, and now if you look down here, you're going to see multiple options trading ones. And so Options can be a great tool. I have a lot of videos on them about them on my channel. That they can be a great tool, right? They can be, but if you use them incorrectly, they very quickly become almost like gambling. And so I have a lot of different ones down here, and I'm gonna start with this one right here, which specifically says options trading. Sorry that it's cut off, but it specifically says options trading, and options trading in an investment portfolio is extremely risky. You can't really call it investing because you are obviously not holding these things for a long amount of time at all. I've personally done a lot of options trading on my channel. It's something that I still do to this day, but I will say there is a lot of a massive risk in something like this that I think can create some problems if you're not smart and you don't have your risks right. And that's why I'm going to put it in the not too bad category, right next to the subreddits, because again, I'm sure there is value in doing it. I personally find value for myself, but I think there is a lot of risks and there's a lot of things you have to know. It's a lot more difficult to generate good returns and smart returns than if you just put it in like the S&P 500 or something. But again, make your own decision. But then going into this one, this is actually the way options are supposed to work. So this is not options trading. This type of options I'm referring to is when you actually buy a long-dated contract, like a long-dated call where you want to actually buy 100 shares of a company at a later point for strike price. This I'm putting in barely a mistake right off the bat. It can be great and a very powerful tool to use to gain leverage in your portfolio. And if used correctly, you actually are just getting shares at a discounted price and things like that. It can be very, very nice. There's a video on my channel if you guys want to check out more about calls and puts, specifically not in the trading area, in the actual what they're meant to be used for. Now, of course, these financial instruments can be used for gambling for some people, but in this 0 days till expiration, speaking of insane trades and things you probably should never be doing, is 0 days till expiration. So 0 days till expiration options mean that you are buying a contract on the same day, and it's essentially like a lottery ticket is what a lot of people will refer to them to. Very high risk, very little reward, but they can pay off massively. I've only ever done them once or twice, but it was essentially like lighting my money on fire, which is why I'm going to go ahead and put 0 days till expiration in the never do this category. I think they are terrible. Very little point in doing that, right up there with Grant Cardone and panic selling. And then over here, this is technical analysis. So this is technically day trading is what I'll say for this one. Day trading, I've tried a decent amount of day trading in the 5 years that I've had my portfolio, never with a large amount of money. But day trading, I have seen people who are really good at it. I think they're technically is a science behind it. I mean, there are a lot of financial calculations. I'm a finance major, and a lot of these calculations do actually have math behind them. There is science. So instead of saying like just options trading where it's a lot harder to predict the volatility of it, day trading can be more priced in, and some people claim they can find patterns in the stocks, right? I don't personally have any success with that, and I don't do it too much anymore. Maybe occasionally just like a quick flip here or there if there's something that I see, but I don't get too in depth. I think the barrier to entry is pretty high on something like this, and the amount of time you're spending on it, you're probably better off just putting it in like the S&P 500 and forgetting about it, right? So I'm going to put it right next to penny stocks in bad. I think it can work for some people, but not me. And then next up, we have margin investing. So for anyone who doesn't know, margin investing is essentially taking out a loan from your broker to buy more stocks. Sounds pretty crazy because it kind of is, honestly. And I think margin investing for the right demographic and the right person, if you're doing it in a wise way, maybe it could be good, right? It could be good for you. For me personally, I don't like to do that. I don't want to take out loans and money that I don't have on financial instruments, which could lose 50% tomorrow, right? Like these stocks and things like that, the stock market can move in any direction. There's too much volatility for me to personally want to use margin investing. I've used it once in my portfolio for like a week, and I freaked myself out, and I was like, all right, I'm out. And so I turned off margin investing. I paid it all back almost immediately. Margin does offer, you can get really high returns. I know brokerages really like people to use margin because they're getting a percentage, because I mean, there's always money in giving people money, you know what I'm saying? But I think margin is honestly going to have to go in the terrible category for me, because I find it extremely high risk for my portfolio, and the one time I tried it, I got freaked out and I did not want to use it anymore. So margin, I'm going to head and put it in terrible. Okay, so this one is not having a stop loss. I know it says stop loss order, but a stop loss is essentially, you can have it in like a flat rate where if you have a stock and you want to make sure you don't lose like 20% if the market goes down tomorrow, right? You can have it set either trailing where it's 10% below the current stock price, or a flat stop loss order where it's at a set determined price. Not having a stop loss order is, it can be very risky. You can end up losing a lot, specifically if there's something you maybe want to hold only for like 6 months. You know, it's a little more speculative, but it's definitely still in the investing arena side of things. Having a stop loss, I think, is a great tool, and not having it, while it's not going to kill you, it can help you alleviate some losses. So I'm going to put it in could have been worse, because not having it, it's not going to kill you, but it is nice to have, and it's definitely a mistake if you don't have it at all ever. But yeah, stop losses are going to be in the could have been worse category. I'm definitely going to rank it behind special position acquisition companies and the meme coins, because it's honestly, it could have been a lot worse not having it, you know? And then next up, this is a big one. Not accounting for taxes in my portfolio. So whenever you sell anything, I hope everyone understands that if you are in a taxable account, which mine is, you have to pay taxes at the end of the year. Every single year, or April, whenever it is, right? You have to pay taxes every single year on every stock you sell. And accounting for that is something that the first year or two, I didn't account for it until I got my statements. And so then I had to pause putting money into my portfolio, and I had to take money out of my paychecks that was going to go into the market that I should have just saved some of those gains, some of those capital gains. Instead, I had to go and pay that to the tax man, which always sucks, but taxes are a part of it, and you don't get to participate in these markets without paying some taxes. Capital gains tax can vary for a lot of different people, and some might also wonder why I don't have a tax-free account like an IRA, or like a Roth IRA or a 401k, and that's because when I made this portfolio, I did not plan on keeping that money in until 65 or 62 and a half, whatever the exact year is. I didn't plan on keeping it in there until then. What does it matter to have it in a tax advantage account? In my opinion, taxes, never forget taxes. Never forget taxes. I'm going to actually put this up here above panic selling, because if you don't account for taxes, you're in a very bad spot. So always remember your taxes, regardless of if you're investing in a custodial account. Talk to your parent about that. If you're 20 years old, you gotta worry about your taxes, man. You know, that's the truth of life. And then the next investing mistake I have made was putting all of my eggs in one basket. So as you can see, there's one egg in this basket full of pennies, and what this means is just having all of your money in one stock or in one investment, right? And so this, I mean, you know, for some people it could work. For me, it did not personally work. I had, when my portfolio was very, very early on, I had it all just in like, I think it was just Microsoft or just Apple. You know, it was just one tech company. And while it worked out for my timeline and just like, you know, where I was in the market, it worked out fine. But I will say there is a lot of risk in having all of your eggs in one basket, because you're a lot more prone to asymmetric risk and things like that could be avoided if you had potentially a more balanced portfolio outlook on things. I'm going to put this in terrible, honestly, with margin. Anywhere you look, you'll see that diversity is key. I think it's just about the only sound advice that anyone can give. But again, I'm not in a position to give financial advice, so don't listen to me. And then next up, we have chasing high dividend yields. Now, I don't know what exactly happened with this photo when I was creating this tier list, but it's supposed to be a high dividend yield, right? So companies will pay out dividends. Most companies will pay out dividends with varying percentages throughout, you know, maybe once a year, twice a year, 4 times, 12 times a year. You know, everything's going to be different, but dividend yields are a very powerful thing. I have a couple of videos about dividends on my channel, but, you know, too high of a dividend is a bad thing, or can be a bad thing. Maybe not in every situation, but in a lot of situations I've been in where I was chasing a super high dividend yield, 8, 9%, 10% even sometimes. What the trade-off normally is for what I've seen in any companies I've invested in is that those dividends pay out so high, but the stock itself either trends down every quarter or stays neutral. And then you're hardly beating inflation. Normally, companies like that with a super high dividend yield, that's probably unsustainable. Probably, I don't know. It just depends on the specific company. In my experience, they have not been good though. They end up hurting your portfolio. Chasing high dividend yields, I'm going to put in the bad category as well. I think I will put it above a technical analysis, but below penny stocks here. So it's going right in the middle there in the bad category. And then this one, also I'm not sure what happened with this photo, but it's investing versus speculating, or really it's using speculation under the guise of investing, right? So this is a lot of your really risky plays that it's just pure speculation. You have nothing in the financial sheets that can balance out what you think is going to happen. These companies that are operating at insanely high price to earning ratios, all sorts of stuff like that, that honestly, very difficult to justify it as investing. I have done this many times and admittedly to some success, but I'm still going to say it was definitely a bad investing decision, but I'm going to put it in the could have been worse category. I'm going to definitely put it above stop losses, but below the meme coins and the special purpose acquisition companies. And then next, I want to move into the investing in meme stocks. And this is right off of that speculation thing, but specifically those super popularized meme stocks. You know what I'm saying? I'm sure you all have heard of a couple companies that just went absolutely crazy. Everyone's investing. That goes beyond just the speculating I'm talking about, where you think there's a company that you want to take a bet on. And this is, you are solely joining in on those companies and betting on those companies because everyone else is. Chasing the crowd, investing on those meme stocks, maybe can yield you a little bit, but in reality, that's not investing, that's gambling, which is why I'm going to put it in the never do this category. I'm going to put it right back here. It's very risky to do. I would not recommend it at all. And then next up, we have being impatient in the market. So this is when you just want to get a trade-off, you want to get it done instantly. It's really difficult to justify investing when you have to be impatient. This is a tough lesson to learn. When I was younger, if I didn't see returns like the next week or the next day, I'd be checking every couple hours. And if things were going down, I would kind of get into that panic selling situation again. And you just never want to do that. I'm going to put being impatient in the terrible category because it often is going to hurt your portfolio in the long term. And then as you can see, there's an NVIDIA logo right here. So I bought NVIDIA like basically at the start of my portfolio about 5 years ago, 6 years ago almost. And I sold it about 3 years ago. And there's no way, this one's kind of a joke. There's no way to know that NVIDIA is going to keep going up. But yeah, I would have had a lot more money in my portfolio than I do right now if I had just kept NVIDIA. But I'm going to put it in barely a mistake because I'm not too serious about that one. But it is often true that your worst investing mistake is the one stock you sold a little too early, kind of going into that patience thing. And then the final investing mistake I have made is not getting in sooner. So I did start investing really young, but this is the key takeaway from this video. There's no best time to wait to get into the market. You just want to do it as soon as possible, as soon as you have money that you can put in. I'm going to put this right up there next to tax. Never wait to get into the market, just go. And so there we have it. That is me making a tier list of all of my investing mistakes. If you guys have made any of these mistakes or exactly how you made these mistakes, make sure to let me know in the comments. Very curious to know what mistakes you guys have made in your investing journey. Consider liking this video if you thought it was helpful. Subscribe if you want to see more about finance, stocks, entrepreneurship, all that stuff that I make. And thanks, y'all. See ya.